If you're struggling to outperform the market, stop. I'm going to show you my bread and butter model here today. No strings, no gatekeeping. And I promise you, if you execute this model mechanically with proper risk management and proper timing, it will change your life, period. I swing trade the leaders. I buy them when they go on sale. If they hold structure, I make money. The leaders hold structure more often than not. I'm working with probabilities out of the gate. My goal is to eliminate me as much as possible because I don't view the markets as risk. The markets are an opportunity. I am the risk. And my entire world and view of the markets shifted when I accepted this. But it takes a model and structure. It takes an edge and the conviction to stick to it. And I'm going to show you mine here today. So let's get into what the triple R is. It starts with a very simple set of qualifiers. I'm looking for a leader in a trend, respecting structure, backed by growing fundamentals. And I want Wall Street involved. I want institutions involved. Very easily put, over 2 billion market cap. I don't buy jump. I don't speculate in my swing trading. I trade the trend. I trade continuation with the momentum of the market. I'm here to make my money make money, not get overly attached to some story or due diligence. I have zero emotional attachment to any of the names that I swing trade. It is mechanical, not emotional. So once I have identified a leader in a trend backed by growing fundamentals, respecting structure, I very quickly see a chart that screams opportunity. Let's take Google here, for example. This is a name that I did recently trade, but money is clearly growing here, and I would like to get involved. So I just need an entry model and clear set risk and reward targets. And that model is triple R. I look for a retracement, a reaction at or around my level, and a remount of the short term. Retracement, reaction, remount. That is my entry model, okay? Again, on a leader in a trend backed by growing fundamentals. So the 3 R's are retracement off of highs in the current trend. Okay, we are clearly in an uptrend. Higher highs, higher lows, higher highs, higher lows, higher highs, higher lows. Retracement, reaction. Where did it react? Right around the prior all-time high level. Okay, remount. I use the 9 EMA as my trend continuation moving average, okay? The 9 EMA. And a remount of it, as long as we hold structure, react off of our level could have been the 50. The level could have been prior all-time highs. The level could have been a recent swing low. Whatever it may be, things we can get into here more as we look at some more examples. But we're looking for a retracement, reaction at or around our level, and a remount of the 9 for my trigger. I then set my stop, usually somewhere around swing low. In this example, it was a little different. We'll get into that reasoning why here in just a moment. But typically it is started at the swing low, and I try to find reasons to tighten that stop up just a bit. But you could even see that this trade would have worked even with the stop that big, okay? We could have still hit that. This is such a clean entry model. So what I want to do here is help you to visualize what we're doing. We are simply trading a trend. Higher highs, higher lows. And we're using structure to define our risk and our entries. And we're using a 9 EMA as our moving average, where being above it is a resumption of trend, okay? So this visually is an uptrend. That is what you're looking for. You're looking for a stock that can hold structure, make higher highs and higher lows, higher highs, higher lows. All of this, I'll say this once, works the exact same way to the downside. Lower lows, lower highs, lower lows, lower highs is a downtrend. It's structure. It works the exact same way. And I do trade this model to the downside when we are in a confirmed bear market. But we're not there right now, so we're going to focus on the upside to this video. But just do know you can invert your chart and everything is the exact same. So looking a little bit closer here at my trade for Google, I did just place this trade a couple of weeks ago. I made 71%. I typically trade about 80% of the time. I am trading short-term contracts, typically around the 30-day expiry is what I find to work best for me, unless there's a reason to shorten or extend that expiry. Before we go any further, the only reason that I use leverage is because I have the data that supports this decision, okay? Do not just blindly jump into options because you see somebody doing it, okay? It is leverage, and it will heighten your emotions if you don't have conviction in what you're doing. I only applied leverage after years of executing this with common shares. And yes, absolutely this works just fine with common shares. If your risk tolerance isn't that high or you don't have the data supporting it, just do this with shares until you have those things. But for this Google trade, It was a very simple triple R trigger for me. Okay, I wanted into this stock. We were going into year end. I knew a lot of firms wanted to get it on its books. It was simply a leader. Look at the RS. We were at 98 even when I took this position. Okay, we're pushing to all-time highs. This thing at the time was sort of leading the AI narrative. And these were some of the reasonings why I chose this entry when, you know, I'm sure there was a dozen others firing at the same time. But the entry model was very simple. It was textbook. Retracement, reaction off prior all-time high, remount of the 9 EMA is what got me in. I set a clean 2-to-1. Now, why didn't I go in this particular trade? Why didn't I put my stop below swing low, which is typically what I will start with if, again, I can't find a reason to move it up? Well, my reasoning on this one of why to move it up, you have to understand that currently in early 2026, but the end of 2025, the market has been in a range and very, very shaky. So while we were retracing off of highs, I was looking for a way into Google. I knew I wanted to take a swing at Google into year end, so I was simply waiting for my entry model, and we had this big down day, and that was a macro event. The market was down heavy that day. The next day, we gap up and hold a bit of an indecision doji candle, but the next day after that was heavy buy side. Look at this volume here, okay? This got bought up this day. So for me, this was what I like to call a defense candle for me. If I'm going to take this position, and currently when I took this, we were in a risk environment B. I like to break the market into a risk profile A, B, or C, and that weighs on my decision making or my exposure, my position count, position sizing. Knowing that we were in that, I knew I needed to be a little bit tighter with my risk just because of the environment that we were in. So when I looked at this as a failed breakdown through prior all-time high level that immediately got bought up right back into our 9 EMA, I looked at this on volume as a defense candle. For me, that said, there's no reason to let price get down beyond this candle, okay? If they can't defend this candle, we're likely to lose this level as well, and it also means the market's likely rolling over. This was a reversal signal. Okay, and if it begins to break, just get out. So in this case, that's why I had a tighter stop, and I was just looking for a 2R right off of that. And then again, I got out this day because we had a very shaky macro environment, and we got a pop right up near. Originally, my target was a little bit higher. I think maybe up towards the top end of this candle, and this was my stop originally. So we can say right about there was my original trade idea, which you can see did work 3 days later. But because we were in the market environment where I'm paying the trader, okay, and I tightened my stop up a little bit, the market opened and it ripped up while the rest of the market, some market internal signals were flashing to me to be a little cautious. I took the profits. It was 71%. I took it. I moved on. Okay. So sometimes I will adapt my targets while I'm in the trade to just secure profits, to protect profits more so. And in this case, I did just take that rip out of the gate that day and take that 71%. So let's get into some more examples here. I mean, my goal in this video is to just convince you that this is the simplest structure-based if this and that model there is out there, okay? You don't need to overthink these markets. You need to stop thinking, react. If this, then that, mechanical execution. So I'm going to make it undeniable how effective this is, okay? This model hits at over 70%, and in a follow-through environment, in a hot trending market, it hits at over 90% in the leaders. This is a money printer, and I'm gonna show you that here right now. A couple more examples. Here's one that I am currently in as we speak. Okay, this was a weekly trigger. So for those of you that don't want to be so active, if you want to swing trade less actively, use the weekly chart or even the monthly. The triple R is even cleaner on the weekly. And here is my weekly entry right here, retracement. Where did we retrace into? A prior breakout level, right? That should now act as support. We finally broke out of this resistance level, went on a ripper, retrace right back into this. Very normal market behavior. We began to react off of it and reclaim our moving averages. I waited until the market was also aligning with positioning, right? The market was a little bit shaky in this time. I didn't take it. The market looked a little bit better a couple of weeks ago as we were pushing to all-time highs, holding structure in the market. Let's just do a quick look at the SPY here. Let's go to the daily. Okay, we were right around in here. This is the day that I believe this is the day I took my UUU entry. I like to align my entries with triple Rs. I'm a swing trader. I don't have to trade every day. I like to wait for triple Rs in the indexes. Okay, look at how many there's been. 1, 2, 3, 4, 5, 6, 7, 8, 9, maybe getting a 10th because the market, like it happens all the time. I like to align it with the market as well, because then I know I have the full momentum of the market behind my positionings, but I roll it over into the leaders. All I'm saying here is this triple R in the market is when I took my U position, okay? So right here, but this was a weekly, and you could also say it was a daily trigger back over the 50 as well. But I was looking at this as a weekly trigger. And look, I'm into the trade. It's going well. My stops are well into profits at this point. I will not lose money on this trade. I'm likely to hit my targets. I'm looking for a little bit more than 2R here on this one. A nice little gap up or push this week should get me well over 100% on these contracts. Another one that I took off of the weekly recently was CRML. All right, this one was a little bit testy on me, a little bit of a shakier environment. I took this 2 weeks earlier in the market. So this is the weekly chart. We get a retracement reaction at around our level. The level here being the prior breakout level. And then we also have that 50 being supportive just below. All right, and we started to push up and we triggered here. So my stop was swing low, okay? Boom. It came very close, but did not hit my stop. So I stayed in the trade. The next week, this guy went on an absolute ripper. I think I made 102% on this trade. Yep, 102% on this trade, just looking over there at chat. So that's another recent example on a weekly trigger. And then we had RCAT. This was poor execution on my end, where I did enter this on a weekly trigger. We had a retracement, reaction, remount of our levels on the weekly, and I did take this trigger, and my issue here was a poor contract selection. I took a weekly trigger, but I only got I think like a 14-day out or 16-day out, somewhere in that world contract selection. I was expecting a bit more of a rip. I was hoping to get out of this position in like a couple of days, but it was holiday timing and the market just didn't cooperate the next 2 days, and it did the following week. So I actually was in a bit of drawdown here, and you can see, let's go to the daily chart. My original intent for this was to not even let it get back below the 200, because again, on the remount of the 50, I did think here that we were just going to rip up through it, which we did end up doing, but it just took a couple of days. And when I looked at this as I was in the position, I knew that that was an improper stop level because it was well above structure, right? You don't just say, hey, this gray line in here is my stop because it's my stop, right? Like I trade structure. So swing low was the proper level, and it was holiday low volume trading. So I decided, hey, there's no reason to get stopped out of this because of an arbitrary line on a chart. We have not broken structure. I'm going to stay in this. So a few days later, I did get out of it, but this was a beautiful trigger. And had I had a longer dated contract, I absolutely would have held this longer because there was no reason structurally to get out of it. It was simply a poor choice in contract, and I didn't have time to possibly let it roll on me again, which it didn't. It absolutely just ripped for a couple of weeks here now. Drones have been very hot. But guys, the point here is another retracement, reaction, remount. Okay, here's your trigger. Swing low is your stop, and you're targeting at least 2R. On weeklies, I like to target more than 2R. Let's look at Dash. This is one that I traded about 7 times last year. I had one weekly triple R. We'll start with that. Very, very simple stuff, guys. Strong company in a trend, change of character, remount of our back on top of our moving averages. Okay, we're trending, trending, trending. I'm looking for a way into this guy. We get a retracement, reaction at or around our level, get a clean earnings report that triggers us over the 9. I entered this, held it for a couple of months, okay, and got a heck of a trade. This one trade was bigger than all of the additional ones, the 5 or 6 other daily triggers that I took the next year in 2025. This was a 2024 trade for me. So let's jump in here and show you exactly what we're looking for. All right, this was the tariff sell-off. Has absolutely nothing to do with this company, and I'm looking for it to change character, get back onto trend. That's exactly what happened here. All right, now I'm interested. We have changed character. I took the remount of the 50 for my first triple R right here. That worked. A few days later, we pulled back down. We did not break structure. I'll zoom in here. Gap down off of earnings, but then immediately invalidated that move, got back over, re-triggered triple R. Boom, entry right there, set a 2-to-1. A couple of weeks later, over 100% on that trade. Let this thing trend, trend, trend. Wait for the next triple R. Didn't happen. We get a retracement. Reaction, remount, jumped right back in there for another over 100% trade on it. Breakout to all-time highs. A lot of times, what do? You see a fake out on breakouts to all-time highs. But what did it do? It pulled right back into structure, did not make a new low. Retracement, reaction at or around our level. Remount of our moving averages got me in for another 2-to-1 right there. And this one I did trade. I did make money on this. I know that it shows maybe a little bit otherwise. I did actually get out of this trade. It was not 100%er, obviously, but I was able to scrape some money out of that. It was some sort of macro event. Is that October 10th? No, the week after. Yeah. Things were getting shaky in the market. I was very quick to secure profits. You know, what happens for me in something like this is I got a move in my direction. I very quickly move things up to break even or slightly into profits. So I can see visually that's exactly what happened here. We were ripping up. I probably had this as my stop, prior day's high. And I can almost guarantee you, this was a couple of months ago, but I've taken many trades since then. But structurally, I can see here that I would have just exited right as we breached prior day's high. Okay, guys, so something else I want to do, and this was not pre-planned. I just thought of the idea that, I slickcharts.com, I don't know what this is, right? I have my own way of finding leaders, but I literally Googled top performers in the S&P 500 2026, clicked on the first page. This is it, okay? These are the year-to-date return leaders in the S&P 500. I don't know exactly how this is going to go, but I'm going to do it with you live because I actually do know. The leaders lead and they respect structure, and we're going to see triple R triggers as our entry models working on these companies. I can guarantee it. First one is SanDisk. That's SNDK. Okay, this guy is running away. When would we have wanted to get into this guy? Clearly a leader in a trend. Let's check the fundamentals. Are we up and to the right on fundamentals? Yeah. Sure are. So we have a leader in a trend backed by growing fundamentals, RS of 99. We've got a solid UD ratio and market cap well above my 2 billion minimum. I need at least 2 billion to at least suggest some institutional participation. But guys, it becomes very, very simple to me. When I identify a leader, well, this is the number one performer in the S&P 500 in 2026, but this was a leader in 2025 as well. I think it was up hundreds of percent in 2025. I know that it was, but what are we looking for here? How the hell do we get into this thing? That's what I'm looking for. Sure, I want to be in this, but I'm not going to chase it, okay? We're well extended off of our 50. We can't spend any time below the 9. Yeah, okay, you could have bought this breakout. That would have done very well for you. I don't find that to have the sort of statistical significance that the triple R does. So what I do is wait for my model. We finally got a retracement. Reaction at or around our level. I know that I was not interested in these due to macro environment, but look at the way that we hold structure. Higher lows, okay? Remount the 9 right here. Boom, there's your trigger. Stop goes just below swing low. And 6, 7 days later, you're at your 2-to-1 there on SanDisk. So there's a perfect way to wait. Okay, that is over 100% trade right there in options and even in shares. 20% trade. You're telling me 20% can't move the needle for you in your account? I mean, come on. Guys, that is what we are looking for. We're waiting for a pullback that holds structure and then remounts our short-term moving average, aligning it with good timing in the market. So let's look at this right here. That would be Monday, December 22nd. Let's look at the SPY and see what that looked like on the SPY. Boom, right after a triple R in the market, okay? Start looking for entries when you get a triple R in the market. So you look over to SNDK, the hottest stock in the S&P 500 is literally triple R'ing on the same day. Guys, that is a high probability setup, period. It will change your life. Force yourself to wait for these. All right, let's move on. What else? We got the COVID stock, Moderna. Okay, Moderna? No, crap. Moderna. mRNA. Okay. Yeah, I expected that. This is a COVID stock. What do we have going on here, man? This is a number 2 so far in 2026. Very interesting. Anyways, what do we have here? So we sort of have a rounding bottom, changing character. Another one of my models is a narrative play. I might need to look at why this thing is catching the heat, but for a narrative play, I like to see a changing character coming out of a rounding bottom. Changing character meaning breaking the downtrend, remounting our major moving averages, and building above. Well, that's exactly what we got right here, okay? So we changed character, remounted, but then what do? You need an entry model. Wait for a retracement, reaction, at or around our level. What's our level? Look to the left. Boom, right there, prior resistance, right around the 50. I say at or around. Look for a reaction at or around our level and a remount of the short term. There's your entry right there on Moderna, coming off of the changing character, okay? I didn't trade this one. I'm not looking at a COVID stock, okay? But It is the second hottest stock in the S&P 500 this year. Okay, well, now that we see that, maybe we should be looking for entries. What's our entry model? The triple R. I'm telling you, it's all you need, okay? It's structural, it's confirmation based, it's if, this, then, that, with set, defined risk and targets. Money printer, let's keep going. A few more here. Lamb Research, LRCX. Okay, hot boy. Look at this, is this all-time highs? I mean, this thing is running away. Money to be made on this chart. Okay, well, what's our entry? How do we get into this thing? How do we get involved? Triple R right there. Boom, 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 going up. Retracement, reaction, at or around our level. Triple R. I wasn't watching this one. I have my own list of focus stocks. This one is now on it. This isn't one that I've been watching very much lately. But guys, if you were watching this stock as it was running away into all-time highs, you're just waiting for a retracement, reaction, at around the level, and a remount. That is your entry model. What else do we have here? CLAC, KLAC. Look at this, guys. What do we have here? We have something that clearly broke out of sideways consolidation. This is box breakout, another one of my entry models. All right, breaks out of it. Now we need an entry, okay? This is a strong pattern when you can break out of sideways consolidation. I usually require 6 months or more, but when it finally breaks out, you need to be looking for triple Rs. The next triple R after a sideways consolidation zone breakout is very high probability. I'm talking over 90% in the leaders with proper market timing, okay? Well, let's see what happened. The first triple R coming out of this box, retracement. I mean, I didn't plan this. This is how it works. This is trading with structure. Retracement, reaction, at or around our level. What's our level? Well, around the box breakout zone, around the 50, remount, boom, immediately hitting our targets a few days later. And then you get another one, retracement, reaction, at or around our level, remount, boom, another entry at it. I mean, guys, come on. This shit works over and over and over again. We're batting 100% so far for triple R triggers. Yes, this is hindsight trading. This is back testing, but every single one of them has worked so far. And like, I didn't plan this. Let's do WDC. This is hot on an absolute ripper. Memory is a very hot sector. Absolute ripper. First triple R that we get works. Another one on the 100%. Next triple R that we get, retracement, reaction, at or around our level, prior all-time highs, and the 50. Reaction, at or around our level, remount, boom, hits. Guys, we're batting 1,000. Intel, this is one that I almost took right here on this remount of the 50. I believe I took UUUU this day instead. I was not looking to add too many new names, too much new risk because of the market risk environment that we're in. But I was calling this out in chat, and I mean, guys, this was the trigger day. Retracement, reaction, hot sector, all the stuff did not break structure. Reaction, remount of the 9. I mean, in 3 days, you had your target over 100% on those contracts. Or if you don't want to trade contracts, 15% on that trade, absolutely beautiful. Don't understand what I mean about your risk and reward. This was the trade, get your intraday there. I would not have seen a reason to let it get back below the 9. 3 days later, contracts inside of a 30-day expiry, that's 100% move. Anywhere from 60 to 200% is typically what I'm getting. That's the range of returns that I've gotten used to seeing on my 30-day expiries. And I'm typically seeing anywhere from a 30 to up to 60% on the losers that I take. But guys, I take far more winners than losers that are typically at least double the size. Money printing. We'll do one more here. What is BG? I don't even know. This is something that I wouldn't be interested in trading yet, but you know, had this been something that you had on your radar as it was gapping up on this change of character, right over the 50, that is your triple R model. Boom, works again. We're still batting 1,000. Like, I'm not even trying. I'm telling you that this is the best model in the market. It is the most simplistic way of just simply trading price action. I use a 9 EMA, a 50 simple moving average, and a 200 simple moving average. I use market structure and I use market breadth. You need to learn market breadth. You need to learn how to read the room, and you need to manage your risk properly. Stop trying to change your life in one trade. Do this over and over and over again, and you will earn your freedom through the markets, okay? I'm talking time, location, financial freedom. That's what the markets have given me, and I worked my ass off to make that happen, and this is it. The triple R is what gave it to me. I'm trying to show you, I'm trying to shove your face in this. I don't care what I look at. If it's a leader in a trend, backed by growing fundamentals, the triple R works more often than not. What did I say earlier? I trade the leaders in a trend, backed by growing fundamentals. I swing trade the leaders when they go on sale. If they hold structure, I make money. The leaders hold structure more often than not. Let's look at MU. Can you guys see it? Triple R worked. Triple R worked. This one I would have been gapped, and oh, it's earnings as well. I would not have taken this one. Fair enough. I don't hold through earnings on any of my swing trading, period. You don't know the reaction. Okay, pretty much all of the banks last week had fantastic numbers and they all sold off. Don't hold swing trades through earnings, okay? Investments, that's a completely different ballgame. Looking back at the prior triple R with room before earnings retracement, reaction at or around our level, remount, boom, gives us our money 2 weeks later. All right, and yes, I am looking for the next triple R on MU, one of the hottest stocks and one of the hottest sectors in the market right now. Memory. Yeah, I'm looking for my next triple R on MU. What else do we have? TSM, another one of the hottest stocks in the world right now. What do you think I'm going to say to you? Retracement, reaction at or around our level, remount, money printer. Let's go to GM. Retracement, reaction at or around our level. What's our level? Right around the recent swing low. Remount, money printer. All the way up here, it did it again. Retracement, reaction, boom, money printer. 4 days later. I know these look like small moves, and maybe it kind of is from time to time, a 3% move, but hey, look, stack that up 20 times throughout the year. You take a 3%, that's 60% on the market. Yes, you're going to take some losers. Okay, so call it 45. Call it 45%. You've 3x the market return. And people like that. The fact that that's not good enough for some people is shocking to me. Like, who do you think you are? You don't get to just walk in and smoke the market. Nobody who's been doing this for any amount of time demands hundreds of percent on a return on their small accounts, right? Like, guys, that's not realistic. You need to build a skill set that you can compound over time. Get real, okay? You're trying to outperform the market. That's no easy task. And if you can do it, by 1%, congratulations, because most can't. So if you're still new to these markets, or if you're still struggling and you're trying to like double and triple and quadruple your money, chill out a little bit, okay? That's not sustainable without an edge, okay? Like, you need an edge first before you can start talking about that. All I'm trying to say here is that these little moves, be okay with taking 3%, okay? And yeah, on options, this one was probably more around the 60% range. But all I'm saying is prioritize your data, okay? Your conviction in what you're doing. Build something that you can leverage for the rest of your life. This model is not going anywhere. Look into history over any markets. This is structure. It's trend continuation. I'm giving you the model. I'm silver plattering the entry for you here, okay? This is all you have to do. If you're struggling in these markets, stop. Let's look at a few more. BTSG. Look at this. Leader in a trend backed by growing fundamentals. Retracement, reaction, remount. Retracement, reaction, remount. Retracement, reaction. Guys, money printer here again. Galaxy. This is one that I gave in chat the other day. Not gave, right? I said, hey guys, this is triggering. This looks good to me. And I'm aware of at least a couple of people that have took it and are up hundreds of percent on these contracts. But it was very, very simple. This was actually a weekly trigger for me. Retracement. Look at this. Reaction. Remount on the weekly, absolute screamer on the remount of the short-term trend. Just beautiful price action here, you guys. It's how it works. This is market structure. I'm giving you the entry model. You need to trust me. You need to try this if you're struggling in these markets. And if you are struggling in the market, ask yourself these three things. I call it the 3 M's. Is it the model? Is it me? Or is it the markets? If you're in drawdown, ask yourself that every time. I still do it. Is it the model? For me, that's a hard no. My models work. They all outperform the market. It's always me or the markets. The models are set. But if you're struggling and you're spinning tires, don't have your footing in the markets yet, you have to ask, is it the model? If you're executing a model known to have edge and it's just not working for you, then it might just not fit the way that you see the markets. But let's assume that the model's not the issue. Let's assume that you have a model that you know to have statistical significance, an edge. I just gave you one. And now you have to get real. Is it you? Is it me? Are you using poor risk management? Are you deviating from the model that you know to have edge? Are you over speculating? Are you trying to outsmart the market? Do you think that your due diligence matters when the market rolls? Are you over trading? Is it you? Get real with yourself. Or was it the market? Do you have a set of parameters that signals when you should be deploying or de-risking? Do you know how to read market breadth, market structure? Are you aligning this model with proper timing in the market? Or are you just pressing buttons? Are you forcing it? Are you trading with the momentum of the market? It's not magic. This is what it takes. It's mechanical execution of a model with proven edge paired with risk management and market timing. If you do this, the market becomes an opportunity. The triple R that I just showed you here today outperforms, period. But will you? If you're struggling in these markets, if you're losing your money, stop. The markets owe you nothing, and they can take everything from you. I do have a mentorship where I work with you one-on-one to help you build your edge. Don't be hard-headed. Don't let these markets take all of your money. It's okay to seek help. I got you. The link is below.